Hey, everybody. Welcome back to this Thursday's edition of Market Mavericks. Of course, I'm joined by Scott Melker and Mike McGlone. We're going to look at the markets today. Bitcoin making new all-time highs. Yields continue to be a concern out there, but the stock market still remains near its highs over the last month here. So let's first dive into Bitcoin, right? I'm sure everyone wants to hear about it. Scott, give us a rundown of what the heck is going on here and how high could it go?
Hard to predict how high it could go, but we all love a blue sky breakout, right? And I think anyone who takes a look at a Bitcoin chart or looks at any asset fundamentally, you have to open your eyes when it makes a new all-time high and heads into that area of no resistance. I can tell you anecdotally, I had 3 normie friends call today and say, hey, should I buy Bitcoin? I'm not sure if that's a top signal or a signal that people are finally paying attention, but it is getting attention in the mainstream this time, I can say. I mean, pushing up to $112,000. How could it not? If we're asking why it's happening, listen, I've been pointing out, I think that it's largely, in my mind, been uncorrelated, and it's shown that divergent strength that Mike and I have talked about. But I really think that it's a bit different this time because there's just such a sustained bid from all of these sovereigns and institutions. And whether that's going to pan out as badly on the way down with some of these who are taking on debt to buy Bitcoin, I don't know. But right now, I just think there's too many buyers in the market. I think it really is simple supply and demand.
Do you think that this is because of like that bill? What is it, the Genius bill? I mean, is it everything combined? Is there any
Everything
particular
combined.
factor? Is it risk on? What's going on? Like,
I don't think Bitcoin's going up because a stablecoin bill is being discussed on the Senate floor. I just don't. That's been in the books. If you want to talk about something that's priced in, Trump being favorable to crypto and there being legislation and positive regulation has been priced in now for 6 or 7 months. So I don't think that's what's moving it. I really think there's just a lot of buying. If you pay attention to the news, which is almost hard to keep up with, every day or two, you get 2 or 3 companies that you've never heard of saying we're buying $1 billion, 800 million, 400 million worth of Bitcoin. Add that to all these companies that are now strategy wannabes, Nakamoto and 21, who are going to be raising debt. By the way, that concerns me. Metaplanet absolutely going crazy. I just think there's a lot of buying. Sovereign wealth in the UAE buying $500 million clips. There's just a lot of buying. Like, I don't think this is that hard to explain. And I think that Bitcoin is small enough still. I know Mike maybe has a different take on it. I do think that it can, like, when it catches these moments where there's just that many buyers, it can just not be correlated and do its own thing regardless of what's happening.
so Mike, a question for you. So, needless to say, there's a tax bill that this beautiful bill or big beautiful bill or whatever the terminology is. It doesn't appear that unless the economy stays amazingly strong and the tax revenues the best ever, right? It's probably not going to be a reduction in spending. Is that potentially part of this? Is that, the questioning over the US and the dollar and treasuries and tariffs and all of this combined causing Bitcoin to see a spike?
Well, first, I want to thank you for being kind to me, not throwing me under the bus right away for being wrong on Bitcoin. And I think, Scott, well designed, because I fully expect it. That's the way it's supposed to work. When you're wrong, you got to admit when you're wrong, get stopped out. And I wanted to show you one first chart. Is like you mentioned, you want to mention this big, beautiful bill. What I just clicked on, and that's the U.S. 30-year bond yield. It reached a high today of 5.15. That's the highest since 2007. Right now, it's 5.06. If there's a major issue with risk assets, it's bond yields spiking. That's not a good thing. Now it's happening globally, but our bond yields are typically 200 to 300 base points above most of the rest of the world, most notably Europe and China, and even Canada and Greece. But what I show in this chart is an oxymoron that basically rarely happens. We have plunging crude oil, which I show you in orange right here, and rising bond yields. That's something that shows you something's wrong with what's going on. The big beautiful bill, what the bond market's telling the Congress is, sorry, this isn't going to work. You can't just keep spending like a drunken sailor without having some issues. But this is what I'll be publishing on tomorrow. I just overlaid a little copper there. Copper on and the bond yield on the same scale. I just converted over to pounds, dollars per pound. It's very rare. They're both up. And the thing is, which part of that crocodile jaw gives. But I want to convert over to the one chart that matters, and that is this magenta line. This is the performance this year of the S&P 500. It's unchanged. It potentially is rolling over. That is going to be all that matters. So I always try to put myself in in the future and look back, is how are we going to look back at this year in terms of risk assets? Are we going to be able to say, yeah, S&P 500 was unchanged or up 10 to 20%, everything was fine despite this major paradigm shift with what we're doing with our US government and Doge and tariffs and things like that? That would be wonderful. And to me, that's what Bitcoin's doing. It's already pricing for that optimistic view. Now, Scott nailed it. It is showing it's not correlated to anything right now. Animal spirits, I get it. It's all getting in. But the problem I sense in Bitcoin is the thing I sensed in 99 in US stock markets, in 89 in Japan. And some of the big examples is this is a pile on trade in highly speculative digital assets. And I also point, I'm just concerned about that with, treasuries actually, company treasuries adding to the balance sheet. I mean, that's major adding systematic risk to this space. And then we have gold. It's still on the year. It's outperforming. Bitcoin's catching up. Now that's 1 year. But the key thing I like to point out is everything bottomed right around here. Beginning of April, Bitcoin went down the most. It was down about 20%. And now it's going up the most. It's tilting over to that the crisis is over. What's staying low is crude oil. So I want to show you one key thing that really struck me today was this headline in the terminal, which is what really scares me. It really struck me what you can do in this space. Massive leverage. This is one entity, has $1 billion bet on 40x leverage, and their stop is about 103. I get that.
On a decentralized exchange. I've watched this happening. Someone actually, I think, offered me an interview with this guy, like with a voice changer or something today for Crypto Town Hall, but it's astounding. It's on chain. But I don't know. How can you even get long $1 billion?
Short term. Yeah, that's the key thing. Yeah, exactly. It can do it short term. He's got to stop at 103. But that's what really struck me about this space. I'm like, I should have been more acknowledged this before, because I remember trading, certainly with a lot of customers, putting a lot of leverage. Typically it's 21 in futures, and you put in a stop. Easier said than done. Oftentimes you gap through stops. The thing is, because markets close. Well, crypto, Bitcoin never closes. So what happens in bull markets? You get massive excessive leverage. And to me, that's the stage we're in right now. We're in the blow off top stage, I think. In the bottom, so this is just one example of that massive. It's always what happens in human nature. You can't stop it. It's like that someone asked me today, but what's going to stop this retail buying of US stock market? Only one thing. Market's got to get to some kind of extreme apex and go down. That's nothing will ever stop it. It's like the broomstick Scott Bassett mentioned in Fantasia. And that to me is the bottom line, is that's why this cannot roll over. I just can't conceive. Now, if we can get back, you can look back at this, and we're doing this in December, and say, hey, stock market was up 10%, Bitcoin was up 30% in a year. That's great. But if this just rolls over 10%, 20%, that's a significant thing. So I'll end with one key thing that matters is since 2019, S&P 500 total return is 100%. I mean, that's historic. Why? Because it happened in a period of COVID, massive fiscal monetary stimulus. The Fed cut too much, the Fed eased, and then they realized they can't ease anymore, or it started to ease because risk assets went up too much. If we just get back 20% of that, that's a pretty severe deflationary force.
Mike, we just
Bitcoin's
did that.
going the other way. Well, that's it. That's my point.
The S&P did a 21.5% drop. We just did that and completely V-shaped recovered, and Bitcoin went over 110. So like
exactly, that's if you assume that V-shape, that it's over. And the key point I like to make is, what's the difference between the last time we had almost the exact same chart pattern? Is that V that we dropped in Q1 of 2020 was responded to by the most significant fiscal and monetary stimulus in history. It went right up. That set the foundation of the stock market to do what it is now. It had this big rally. Now it's the exact opposite. We don't have those forces, yet we've bounced to unchanged on the year. The question is, look at the optionality here. So if you're a leveraged person, you think, okay, if we are up 10, say another, by the end of the year, we're up 10% S&P 500, that's fine. Everything's good. Nothing happens. Back to the same old. But if we're down 10 or 20%, that shifts the world order. That's the optionality I'm worried about. And I think some of your prudent traders got a little short too early trying to put on, and maybe are potentially doing that again, because if this rolls over, that's all that matters. All the down rolls tumble. That's my point. It looks like now for Memorial Day weekend, yeah, it should be easy and flat, but it cannot go down, because that shifts everything. And that's where this thing, like I like to point out with that's a high correlation. But I just like to point out that classic correlation between, well, that's true, Dogecoin and Bitcoin gold ratio, which is breaking out potentially, will go back to its, same chart syndrome.
So looking at like the S&P, right? I mean, we've had this monstrous rally in the S&P. This week, I think 3 of the 4 days we had gaps down on the S&P, and almost immediately out of the gate, the market's just ripped right back to the flat line, right? And then yesterday we did have the 20-year bond auction that was weaker. That kind of freaked the markets out. But then you look at today and it's like, okay, well, yields are pulling back today. Markets are going right back up. So there's this kind of feeling out there that it's almost like, it almost feels to me like there's like, you can't lose if you invest right now, whether it's Bitcoin, whether it's gold, whether it's stocks, it doesn't really matter. And the question I guess I have for you guys is, I've been reading that institutions are very underinvested, while the retail is the ones that are coming in en masse, whether it's the Redditors or others. And obviously, does that tell us something that we need to be careful about, or what?
Can I just respond to that real quick? That's what my sense that I get, having been in the space for a while. And it's the key thing I have a benefit of working for Bloomberg and having the, with some of the exposure, some of the most significant and astute financial institutions on the planet, is I get the questions. The key thing I'm getting from, it was very similar to what I remember in 1999, when the institutions were all in, but the retail was all in, but your typical smart money, matter of factly says, oh yeah, I just had a good friend who's semi-retired, said, oh yeah, I'm way underweight equities. This is not an environment to be overweight. This is when you're supposed to sell when you yell, but you can never pick the top. It's just when it does revert, you have to be very, very careful. And I just want to show you one big picture macro chart that I'm really concerned about. I watch ratios a lot, but so you can look at gold versus everything else because there's somewhat apples to oranges. And Scott, you pointed out a lot, but gold versus silver, that's an enduring trend. You can go back 100 years. On a year-end basis, gold, silver, right now at 100, has never closed above that level. And every time we get this high to go down, the last highest ever was in 1991, the recession, it was 9.1. So here's something I'm really concerned about. Gold, silver's at 100. It's probably not going to be there at the end of the year. It's more likely to go down. But what's happening is we have historically low unemployment. That's my point, is our economists have been pointing out for that to go higher. And that's why I look at gold, silver is telling us there is a problem globally. This is the macro I see from commodities. And I want to tilt down to more of the specific high volume, high speculative spaces like cryptos.
So flipping back towards Bitcoin, right? I mean, I know people want to talk about this because it is such a big thing with Bitcoin making new all-time highs, right? But one thing that stands out to me, Scott, is that the poor altcoins, man, like I mean, Bitcoin just keeps making new all-time highs. These altcoins aren't even back to highs.
They're nowhere close to their highs, but since Bitcoin was in the 90s, a lot of altcoins have outperformed Bitcoin on the way up. And I think that's been really interesting. You can see that like Bitcoin dominance kind of topped. This Bitcoin dominance dropped significantly, obviously. It did rage back over 50%, but now seems to be dropping slightly. This is the first time we've seen any of that. Of course, that's because Ethereum had a 40% move in 2 days. Maybe that was a technical bounce. But if you do look, altcoins are at least keeping up, if not outperforming on these moves to the upside, which means there is some new money here. There has to be. Everything can't be going up across the board without, we used to have the washing machine. You sell your Bitcoin to get altcoins. You sell your altcoins to get Bitcoin. Same money circulating. So I think it has been a bit different. That said, like, there's been one trade and one trade only, unless you're, the Michael Jordan of leverage or altcoins. And that's just slowly buy Bitcoin and wait. It's all you've ever had to do. And everything else is I think so. This is one of my,
this is for smaller investors out there, and a lot of them are watching, right? It's hard to think, oh, well, I'll buy Bitcoin here at 112. Maybe it goes to 120 percentage wise. What is that, right? Versus, can I buy, Dogecoin and see it go to $1, where I can make hundreds of percentage points? And I think that's the bigger issue now. Like, it used to be where you could make these crazy money on these altcoin pops, but it doesn't seem like that's the type of environment we're in anymore.
I think we'll get there. I don't think it's going to be close your eyes and throw a dart and everything goes up 10 times, but there's still a hell of a lot of speculation in this space, and money's going to find its way to a lot of those narratives. That said, most people aren't going to catch them. They're just not. And actually, let me even rephrase that. And the few who do aren't going to sell. So it's not going to matter when they're down 90%, in a year or two. So it's just a really, really hard game to play. And right now, Bitcoin has so much narrative and so many fundamental tailwinds. I just think it's the obvious place to be. That said, like, I bought a lot of Ethereum when it was down in the 1600 range down here. To me, that was just such a gratuitous obvious. And I bought a lot of Solana on some of those dips a few months ago. So I'm pretty heavily exposed, I think, on the altcoin side. but not so far down the risk curve.
I mean, it would make sense too that if as long as the stock market, I mean, the way I view it too is that Bitcoin to me is partially a risk asset, but altcoins are really like if the Nasdaq
Altcoins are risk assets,
right? If the Nasdaq's running, altcoins have a shot of having a monster move.
Yeah,
right?
There's no question that altcoins are risk assets. The question is, are they going to react to what's happening kind of insular within the crypto market or to what's happening in the stock market? I can see a world where, regardless of kind of what's happening in stocks, or at least if they're not massively dumping, that altcoins could go on a major run without the NASDAQ having to go up, right? Just because eventually this Bitcoin train stops and we know what happens then. Those people are rich and bored. They find something else to speculate on. Question is that just going to be a bunch of meme coins?
Right. So all right. So we have Bitcoin that's really performing spectacularly. In fact, it's gold's pulled back just a little bit, but still really near its all-time highs. Bitcoin's at all-time highs. Stock market close, about 5% off of its all-time highs. Oil's in the doldrums, right? I mean, it's broken 66 to 65. Copper is kind of bear flagging. Those to me, Mike, are signals that we need to be alert of. Oil and copper, right? They're industrial signals. With looking at the 10-year yield, and I wanted to ask you about this, the 20-year Treasury yesterday. Can you explain to people why do we know that demand was weak? Because again, this is a lot of like more technical jargon, but essentially the market sold off, yields went up. Can you give us a rundown on what happened there?
Yeah, it's a good topic. I'm glad you went there because let's get the facts. And I like to share a chart as I speak. My colleague, Ira Jersey, he's an expert in this space. He said the 20-year auction wasn't really bad, but it was an excuse for over-leveraged people like me who've been bullish forever and been trying to keep getting long treasuries. I don't buy them leveraged anymore. They got stopped out. It wasn't as good as they wanted to be. So it wasn't really a bad auction, but it stopped them out, pumped us up. I like to use a 30-year because that's tail. Tail got to 515 today. Right now it's 505. And I just show you how high that was for a while. It was up here. For a while, and copper on the same scale as this is a crocodile jaw. Yields up, copper up, crude oil collapsing. It's a very rare situation. The only way to sustain this, I think, is the U.S. stock market has to absolutely go up. That's why I look at it at the end of the year basis. If the U.S. stock market goes down, it's going to legitimize my outlook for crude oil for 2-3 years now to go back to 40. It's done it for the last almost 20 years, bottoms there. Makes bond yields peak, which I've been wrong on for 2 years, admitted. I still think that's going to be next big trade, and maybe I'll have some hair left. And copper to break down. Again, copper this is the whole world facing those tariffs for Trump. But right now, we're in that unique stage where everything's going up. Cryptos are leading the way, most notably Bitcoin, and the stock market's hovering unchanged on the year. So to me, that's the key thing is watch it. The bottom line, when you see yields like the U.S. Bond yields spike for this spike like that, despite the fact the Fed wants to ease and they can't. That's just showing them they can't ease. This is the key signal from last year. They eased and yields went up. That was your signal to stop easing, yet they kept going. And part of that is because there's so much wealth pumped in the system, and that's why I want to tilt over to one key. My favorite chart that I love showing you, and people might be sick of, is we're talking about alts a little bit. That's that Bitcoin gold ratio overlaid with this is Dogecoin, but Bitcoin gold's back nearly upper into the range now. But the key only way you can support an economy and environment, things like Dogecoin, which is the number 8th largest crypto, and Fartcoin that have massive market capitalization, is when you have the U.S. stock market capitalization at 2 times GDP and the highest ever versus the rest of the world. How long can we stay there? That's why I think I just can't be long risk assets here, because the risk of this tilting over is that we do what history is going to point out from the future. The question's when. Yeah, 2 times GDP has never worked. Will it be different this time? Questions, when does it start reverting? And I think it's more likely to be this year. And if not this year, when?
The only difference in what we believe is I don't think Bitcoin's a risk asset. That's it. I mean, that fundamentally, I think that a lot of things here can happen. I just think, yeah, I understand.
High correlation to the stock market, highest 0.70. I get it. Very low correlation to gold. This is a 16-quarter correlation. I agree with your thoughts, but the point is the facts show now they're great. The facts show the other way. It's just we've only had 2 down years in S&P 500 since Bitcoin has been launched. Only 2, and that was 2018, 2022. Bitcoin dropped about 3 to 4 times what the stock market did then. Now, maybe it's different. That's my point, Scott. I'm worried about now is there's so much assumption. It's so much just expected that it'll go higher that I'm worried with people like corporate treasuries getting involved and doing what Michael Saylor did, who got in at a good level. We all were bullish at 10,000.
That I'm massively
That's
concerned
systematic
with.
risk.
I think
Very
I'm the first
systematic risk.
person. Yeah, I'm one of the first person who was willing to go out on a limb and say that bothers me a lot.
Exactly.
And
It's
I did it the minute I heard the Nakamoto announcement, which I like David Bailey. I love the Bitcoin Magazine guys. I'm sure they will do this responsibly. But we're at 3 now, big ones, you know, like 21, MicroStrategy, and Nakamoto. I do believe that becomes 30. 30 people, you know, 40. I think we get to, you know, 120, 130. Then people start to notice, just like retail traders and a bunch of guys who are basically hedge funds LARPing as Bitcoin treasury companies come in and raise a whole bunch of debt right at the top that doesn't have much demand, buy some Bitcoin, and then the next time it goes down 20%, they all have to puke and we get another 20%. That really bothers.
That's the problem. That's what happened. That bothers me too, because there's only one thing that stops that flood of the broomsticks in Fantasia, Sorcerer's Apprentice. Scott Bennis. I love how he pointed out. He must have read Exodus by Nova Herrera, like I did. There's only one thing that stops that, is the price has to shake people out. Otherwise, like you said, it's just like there's a lot of buyers. I don't see what stops it other than what stopped the 29 crash, the 89 crash in Japan, the 1999 peak in the US is you just get too high and it stops people out. And right now it's a pile on.
Yeah, I mean, it is certainly interesting to compare the risk asset side. I mean, there's definitely, to me at least, and this is just from a trader's perspective, like there's certain days where when, you know, the Liberation Day occurred, you saw Bitcoin actually catching a bid. People seemed, and I was guessing this was global investors were like, screw the United States. I'm not going to put money into them. They're trying to crush our economies. Let me find out and let me store money in Bitcoin versus treasuries or the US dollar. But then we've obviously seen the stock market rally and Bitcoins continue to go up. So the question is the NASDAQ or S&P going up causing Bitcoin, or is money still just flowing into Bitcoin because people are still concerned about the leadership of the US? One thing going to you guys, and I'm curious about your opinions on this. We have about a month and a half left until those initial tariffs are going to go back up if no deals are struck. I think China still has about 2.5 months before that 90-day window closes. Do either of you guys think we'll get to a point where there will be no tariffs, or it's just a matter of how high the tariffs are going to be on these countries?
I think it's much more the latter. I just want to key out one key thing that I think Bitcoin is really benefiting from is this flight from U.S. Treasuries. Spiking bond yields, like what's your alternative? Okay, gold, Bitcoin, and then trickle down from there. But I think that the key thing to remember here is what happened here when we bottomed. April 9th. The only reason we bottomed is because Trump hit hard, just like the book, No Price, No Trade is Free, Robert Lighthizer predicted, on tariffs. And he only lightened back when the stock market went down. To me, that's now we're at the stage where not only is the stock, it's more significant than ever. It's 2 times GDP. And so I think he's going to keep pounding on tariffs and harder until or unless the stock market goes down and tells him to pull back. Just like the Treasury market told him to pull back and pushing back on Powell and pulling out of Powell. So to me, this is at the key thing. Now, this is his key theme. His legacy is at risk here. If he doesn't implement the stuff now, he never will. It's been his focus for decades, and he started it, had only pulled back because the stock market went down, and then now it's back unchanged. So why not keep pushing that leverage, pushing that issue until something tells them to push back? And that's number one thing to push back is stock market. Now remember TARP 2008 when the Congress first rejected it, and stock market collapsed, and then within a day they passed it. We're kind of in a similar situation. The difference now is stock market is the most expensive in 100 years relative to GDP. It just can't not matter. It's always history. It becomes the economy.
So do either of you guys think we'll see, I mean, Mike, I know you have a longer term downside projection on Bitcoin, you know, into the 10,000-ish potential range. But Scott, do you see Bitcoin, I mean, we know historically has these 50-60% corrections. Are those over now? Like, is it getting to, no, okay. All right.
No, listen, we all said they were over last time. Super cycle, can't happen again, all these reasons. I don't think we get 85% correction.
But you think
So
50 or 60 is
right. So
possible?
I think because it's institutionalized, you get a little less volatility to the up and downside, as the same people who are trading equities come in and start trading this in sides and treating it like a hedge fund and taking these carry trades and, finding creative ways to get yield. So I don't think it's the asset anymore that gets the 85% drawdown, but that also means you can't predictably say, we're going to have this 4-year cycle and we're going to get 10x returns to the upside and altcoins are all going to go crazy at the same time. You kind of can't have it both ways, right? But I still believe there's a lot of juice to squeeze from Bitcoin. And Mike, you said earlier maybe it's a blow off top. I think we do go into these hyperbolic phases on Bitcoin, especially when you break a high like this. I just wouldn't be the guy picking up pennies in front of a steamroller trying to figure out where that top is, because that could be 120 or it could be 185 in a month.
Exactly.
Right. It could. I'm not saying it will be, by the way. That's not a price prediction, So if you think it's going to draw down 50%, that could be 50% from 200 to here.
That's a good point. I'm glad you said that, because it's true. And now there's ways you can structure options to protect yourself. Obviously, there's always risk cost benefit analysis and risk versus reward. But here's the systematic risk of it. Basically, is assumed it has to go higher, and if it doesn't, that's where I'm really concerned. But that's my point. If you get and I'm glad you pointed out this. Every time we've had these kind of moves, everybody says, "Oh, those 50% corrections are over." Now, what you said is great, because you're such a more rational person versus the other people tell me. And part of the reason I put that out there, that potential lopping off of zero, particularly just so people know their risk. Don't overweight this space. But there's going to be a chance to overweight. It's just not here. But I want to just, if I can show you my base case is, I can show you one example is, this is the S&P 500 since 2000. And I put it in log. We've had two 50% corrections. Now we've had this massive rally. We've had nothing but little blips, little blip here, little blip there, little blip there. My base case is we're due for a 50% correction. And I think it's going to start this year. That shot across the bow. That's why I pointed out earlier, it absolutely has to go up, because if we start trickling down this year and say by the end of the year, it's not going to be these little silly things. It's when it goes down and stays down for a long time, which always happens in history when you get to 2 times GDP. That's what people are forgetting. But it's only going to happen when you have to shift sentiment, and almost never happens. And the number one factor for that is price. That's why I point out Bitcoin's a leading indicator, and that's why I tilt towards everything I learned about when things get excessive. For instance, the .com bubble, we had all this silly internet stuff. This is what's happening in cryptos. We're going to look back from the future and say, yeah, I needed the purge, you got the purge, and then we resounded. But right now, it's still the animal spirits heading higher.
Are you guys in the camp that we are on a path to a recession this year or next? I mean, is there a way to avoid it? Are we not going to have one? I mean, we've had one GDP down quarter, but obviously, the general labor market's pretty strong still. And we're still seeing, obviously, other factors that are keeping us up, but also a lot of signals that are telling us there could be a recession. So I'm just kind of curious as to, what are you guys seeing in the overall economy?
So go ahead, Scott.
No, please. I was going to ask Gareth. Why don't you answer one of the questions?
I want to respond with that, because here's the way it usually works: is those of us who expected this thing in 2023, it did not happen. Throw you down on the mat and then happen. And this is the point I want to make about when you get that expensive in the equity market, is the number one way to cause the recession is the exact opposite of what created all this massive wealth. Again, near the highest in 100 years, and that is the stock market going down. That's what happened in 1929. That's what happened in the 90s in Japan. That's what's happening now in China with property and equities collapsing. And why not us? That's my point, is this is why I showed that optionality here. You absolutely cannot roll over here, because if you do, the iterations of this rolling over it's just a normal reversion of the most expensive stock market none of us have ever seen. That's my point, it's got to stay higher. And that's
I do think that's an interesting point, because I was reading something from another analyst. I forget which firm, but they were basically saying that stocks were basically back to where we were at the start of the year for the stock market. Mm-hmm. But because we've seen a slowdown in the economy and earnings expectations have started to come down, stocks are actually pricier on that comparative basis than where they were at the beginning of the year, because the economy has started to slow. And so it's just kind of interesting, people say, oh, we're not at all-time highs, but relatively a lot of the stocks out there are more expensive now than they were at the start.
Well, it's the key things, the key metrics I watch is to take it's a Buffett model. Why is he overweight cash? Because S&P stock market cap to GDP is the highest in our lifetimes. And then this the other metric that is, okay, we can push that one aside. How about just the valuation of U.S. stock market versus the rest of the world? It's the highest ever. I mean, that was stuck from 1 to 1 for about 50 years, well, 40 years, and then 2013 it popped up to 2 to 1. Now here we are. Is that sustainable? And that's my point. Is it's just so risky. Crypto's leading the way, and that's why I keep looking for alternatives. And that's why, yeah, I'm still very bullish gold. I think gold's figuring it out. And still thinking long bond yields will drop. And yeah, I've been wrong on that one.
So, and again, Scott, feel free to jump in. We're just about out of time here. But to me, it's more of like musical chairs, right? Is that, we've been in this phase of free money, cheap money. Money's gotten expensive, but then the stock market took over and made people feel wealthy and have more money. But at some point, that merry-go-round, the music stops. And then the question is, what assets are left without a seat and are out of the game? And I got to believe that at some point that happens. I guess the bigger question is, just like in the crypto markets, right? I mean, when people were buying, and correct me if I'm wrong, Scott, but when people are buying Fartcoin, they don't really think it's going to be something that's like a great store of value. They're buying it in hopes that it goes up so they can just dump it to someone else.
They're playing the lottery or the casino. Choose your analogy, but yes, they're not planning their retirement fund on where Fartcoin will be in 10 years. And if they are, God help them.
All righty. On that note, on that Fartcoin note, let's end it today, folks. Great job. Great discussion. Awesome stuff. Thank you all for tuning in. Follow these gentlemen on the lower. You see the socials. And of course, we'll do our best to be back next Thursday. Take care, guys.